GM, and welcome to the Modern Market. Btc, I think you are on mute.
There we go. I'm now off mute. Good morning. Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. I'm your host, Btc. I'm joined by my legendary co-host, Legendary. We're going to get into everything that's going on in the market in just a little bit. But before we do that, just a reminder, friends, that nothing that we say here is financial advice. This modern market is exceptionally risky, and we do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 4th of July. How are you doing? How are you feeling?
Doing quite well. Happy 4th of July. It's also election day in the UK. So a couple of other things to focus on and look at if you don't want to look at red charts. There's some interesting geopolitical things going on at the same time.
Yeah, for sure. A lot of interesting stuff going on. Also, interesting stuff going on, I have to say, from the conversations that you have been sharing with me. This move to become, I can't remember what the verb that you used, to penguify yourself. Is that the verb? Is the verb to
I think it's
penguify?
Edgify.
What did you say? Pudgify. Ah, yes.
Edgify,
Okay.
yeah.
You've pudgified yourself. I thought it might have been pengify, but it sounds like pudgify is the correct verb. It's going pretty well from what I can tell. What's some of your key observations from yeah, how are you viewing the world now as a penguin?
Different. It's a different world as a penguin. No, I was quite surprised by people reaching out from the Pudgy community, by Becca, who's in the audience, reaching out to me to say that she's happy that I have joined the Pudgies, and people actually, did care about the name change and about the new PFP. Feels good to be a Pudgy, and I'm not saying that because I'm up on the purchase of the Penguin. It certainly is a reason as well, but generally feels good to receive such a warm welcome to a new community.
That's pretty cool because I guess, look, I think one of the things which people think about when it comes to joining a community is obviously you want to feel something, right? Like you're not just spending these huge amounts of money purely to flex, like on well, I guess maybe that's part of it as well. But I think the thing that keeps people around, fair enough, maybe the initial purchase might give you a bit of an adrenaline rush and you're able to flex that for a little bit. But the thing that will keep you is the people. So that's pretty cool to observe. And from what I understand, not just some of our listeners who are all awesome and have been reaching out, but also some more people on the professional side of things, right? I don't know if we can disclose some of those conversations, but maybe just an observation from you on that perspective.
Yeah, I mean, you know what I said to you, right? When I had my Bored Ape as a PFP, and when I sold the ape
Yeah.
after Sunday for like 60-ish ETH, and sold all of the apes with that as well, I was like, I'm not going to go back to an expensive PFP. I just don't want to have an emotional connection to a PFP, because then I'm going to
Yeah.
probably miss time selling the whole lot of the collection that I'm holding with it as well. But
Yeah. Yeah.
then I broke my own rule, went back to the Pudgies, and people do care, which is, it's a sad reality to a certain extent, that people do care about the PFP that you have. And I've been trying to have conversations with certain people who I didn't manage to reach out to, and now it was easier to connect with them since I'm back to more expensive PFP, which to a certain degree is ridiculous. But it was the same journey like as a creator, right? It was easier to get a hold of people once you have reached a certain follower number or a certain
Yeah.
level of
Yeah. Yeah.
visibility in the space. And I feel PFP is just a different aspect of the very same game.
Yeah, that's so funny. But then it makes me think, to what extent or at what point does it become negligent on my part as part of the modern market to be rocking this non-NFT cartoon drawn friend, something that my friend drew for me, just for fun? Like, is this gross negligence now? Because it's clearly not a powerful marketing tool as much as yours is. Is it, do I need to be making some type of purchase now that we know the true way the world works?
You know what I was thinking? Your PFP kind of looks a bit like a pudgy. It looks a bit similar to a pudgy. But no,
It
in all
doesn't.
seriousness, I don't think that. I don't think that you should chase to be part of a PFP collection just for that extra unlock. Because in all fairness, I think that we've both gotten to a level where we can reach so many people in this space already, or can find a way to reach people that we want to reach. And maybe there's a bit of an extra unlock, but I would still say that 90% of that is due to the fact of what we have been building and positioning ourselves within this space.
Yeah, I think that's fair. Yeah, I'd be lying if I hadn't been reflecting on it a little bit recently. But just for people who might be interested, and Funky, I see with your hand raised, we'll come to you in a second. And obviously, we'll get to the headlines and all of the price action stuff in a moment as well. But one of the reasons why I almost on principle have refused to buy anyone else's PFP for the last, I don't know how long it's been, maybe a couple of years or so, is because when my last PFP, which was a Moonbird actually, when I bought into that relatively early in their process, before it kind of ran up to 30 ETH or whatever, I got in, not at mint, but like right just after. I just realized the way that these identities can actually wrap hold of you, and you really feel trapped, and subject to the founder's ability. Like suddenly my identity was tied to the execution of someone who I couldn't control. And I think in that particular instance, it was even more obvious to people because that was clearly a mismanaged project. And there was mistake after mistake after mistake. I think that's pretty fair to say at this point. And I just started to think, do you know what? The only person that it seems that you can trust in this space is yourself. That's the only thing. That's the only thing you can definitely control. And it was during that period of time where lots and lots of NFT projects were untrustworthy to the extent, not saying that there's not good people trying to do good stuff, but it was just hard for people to execute in the way that I would have felt good attaching my name to it. Because lots of people think that you as an individual are kind of trying to attach yourself to someone else, but in some way it goes vice versa, right? Like obviously from the project's perspective, they want good people as well. And if from my reputation's perspective, I want to make sure that the people who I'm attaching myself to, my identity to, would be in line with what how I want to execute. So that's why I refused for a long time, and I'm still refusing, because I feel like I just want to bet on myself, and that's the only way for me to make sure that I can trust. Got trust issues, Legendary. Got trust issues from the last 2 years in the NFT market. What do you say? What do you say to that before we get into the headlines?
Yeah, I think no matter how long we are in this space, we'll always have trust issues, and they will get more and more. I mean, some of the topics today very much relate to those trust issues.
Yes,
We will talk about well.
they do. They absolutely do. Before we get into it, because we are going to get into the headlines, some of which have deeply embedded trust issues. Funky, your hand is raised. I think you want to come in with a comment here. Welcome to the stage, my friend. How are you doing?
GM fam, I'm great. I just 2 quick comments. One, B-check, I do not think you should change your PFP. I love it. To me, I get like investigative journalist vibes. Like you're just kind of got the flow. You're trying to pay attention to the market. I love your PFP. I love the fact that it's not connected to anything. And to Legendary's point, give a shout out to Becca, and I know some other frequent listeners, Dow Jones, Riggs, and people that rock pudgies. When I joined the Igloo, gosh, I don't know, almost a year ago, I only have a little pudgy. I have one, but the community is so embracing, accepting, wonderful, warm. Like Burko is probably one of the best community managers I've ever met in the entire Web3 space. He's so accommodating, just always constantly like engaging with people who are coming into the server. If I'm not saying anybody should just run out and get a pudgy, but you can even join and not even have a pudgy. It is just an incredible community. When they do their every other week like Igloo meeting, it is insane. You'll see hundreds of Pengus show up, and they're just like, it's vibes all the way down. It's crazy. It's a great community, so I just wanted to show them some love. But yeah, B-check, do not change. This is like me keeping Kitty King as an older guy with 2 cats, or now with 1 cat. Like I think it's me. even though it's a small collection that most people wouldn't recognize, right? So there's something about choosing a PFP, and I really love Legendary's Pudgy. I think it just, and the yellow in the background always just makes it legendary.
Yeah, I take a point. A definite shout out to the Pudgies. They clearly doing something fantastically well on the community side, and appreciate the take on mine. Just Stefano in the YouTube comments maybe can agrees. Said Bcheck's PFP gives me Zach XBT vibes. I don't mind that. I don't mind that. But the thing is, I can't back it up because I don't have the ability to digitally assassinate just yet. Not that's not on my resume at the moment, but maybe we can try and do that in future. Look, let's get into the headlines. There has been some other forms of assassinations going on, some other digital assassinations, but we'll talk about that in a second. As always, this is from the snapshot, which is pinned up top. If you do find it brings you some value today, please do give it a like. So starting with price action, this is not good, guys. We started the show on a lighthearted note, but this is not good. Crypto down 4%, Bitcoin at 57.9K, ETH down 5% to 3.2, Solana down 8% to $135. Headlines are that crypto liquidations hit 200 million as majors tumble, as I just said. Number two, Solana's pumped-up fund surpasses ETH revenue with almost $2 million of daily revenue. That is insane. We've got to dwell on that for a moment in just a little bit. And finally, the Well token disappoints with accusations of insider selling. This was the token attached to the Yoga Pets, which Legendary has actually been mentioning a few times. And there's all kinds of strange activity on that token in the last few days. And to be honest, we're just noticing a trend of this stuff. So maybe we'll give a few instances of how these things seem to be playing out most recently. Getting into some NFT price action, we've got CryptoPunks up a couple of percent at 28.5, Bored Apes down a few percent to 9.6, Mutants at 1.8, DGods at 0.8, down 7%, Captains down a few percent also to 2.9, Azuki's at 3.7, Penguins back to 11.2, Mad Lads also down 8% to 80 Solana, and the Nouns winning bid was at 3.1 ETH. Legendary, that is the price action. Those are the headlines. Is there anything catching your attention though before we get into a bigger discussion today? Anything catching your attention before we get into that bigger discussion?
Yeah, absolutely. If we take a look at Mintify, our NFT trading platform and marketplace partner, it's very easy to summarize today. Basically, everything is following the market. Everything is red, with something being very, very red. Again, obviously, Yoga Pets, one of the collections in the Kungs ecosystem, being down another 60% over the last 24 hours. And really the only green things that we see are Doodles and Potatoes, both being up 1.2 and 1.7% respectively.
Interesting. What are Miladies doing on a red day today? Are they down as well, finally, or are they going to hold?
Barely. I mean, they are down 0.17%. So basically they haven't moved, and Remilios are down 3%.
Just absolutely rock solid in the face of market-wide carnage in general. That's interesting to see. As you said, a very, very red day across the board. Crypto down, NFTs down. Is this what you expect for a little bit here, Legendary? Like, price action in crypto seems to be getting weaker, at least for the moment. NFTs had actually shown quite a lot of strength recently as a consequence of, not as a consequence of, but after a lot of that liquidity got pulled, it seems like NFT is going to be fine, because I think some people were panicking that they might not be. But if crypto continues to get weaker, do you see them to continue to bleed as well?
I don't think to the same extent. I think at least now with Bitcoin, there's still a bit of the concerns around the US American government, as well as Mt. Gox unlocks, because quite honestly, the rest of the market, the stocks market doesn't look too bad. But I think we see a bit more pressure in cryptos right now than we see in other asset classes. But I don't think that NFTs will continue to trend down at the same rate as the market, particularly so because now we have the very much changed situation with no more blur farming going on. And I think if we still had blur farmers, we would probably see now more volatility in the JPEG market, with more people or more bigger farmers wanting to cut losses and massively dump some of the collections that they would hold in the hundreds. But because we don't have that anymore, I just don't expect the same amount of downtrend in NFTs then as in crypto or in alts.
Interesting. Do you think one of the things I'm wondering is that we've spoken before about how the supply of meme coins is just insane. Like there's just so many coming to market every single day. There's so many new tokens coming to market every single day in terms of like protocols who are launching their tokens. And then there's this huge NFT ecosystem now, which just never existed before prior to 2021, realistically. So this is like, if NFTs captured a lot of the liquidity that might have otherwise gone into crypto itself, because that was one of the arguments for 2021, right? Like the reason why we never went higher was because so much of buying pressure was absorbed by NFTs. And now one argument now is, well, the reason why NFTs can't go higher is because a lot of that speculative capital, instead of going into NFTs, will go into meme coins and other stuff. It just seems like there's so many different things that this liquidity can go into now. And maybe in some way as well, that again represents why the, like, say some type of blow off top where retail comes in, or, you know, people always talk about retail coming in and what, like sending Bitcoin to 100K or something. Like, is that even possible? Because the assets that they'd come in to buy are far, like there's an actual retail economy now on chain, because maybe the first thing someone will go to would not be to buy Bitcoin anymore. It's more likely to be, well, I'm retail coming in, or I'm a speculator coming in. I'm going to buy one of these meme coins. Maybe I'll buy a couple of Solana NFTs. Maybe I'll buy one on ETH. Maybe I'll buy like a Web3 gaming something. Like all of these customer options never existed before. So I'm wondering whether like we can really get that explosive move up in the same way as previous cycles, albeit, you know, now we're waiting for institutions to come in instead. But those are just a few reflections from me. Legendary, would be curious to hear your thoughts.
I think we can. I still think we can see a strong, explosive upwards movement. Even more so because it's now earlier than it's easier than ever to buy BTC. Obviously, with ETF, it's going to be the same situation for ETH, probably at the end of this summer. So I think we should not underestimate this, and especially once the market shifts more positive to crypto again, once that anxiousness around the Mt. Gox situation has removed itself from the market. And then we would continue to sustain the same level of positive sentiment in other asset classes. I don't see a reason why crypto markets couldn't move up explosively. But one point where I absolutely agree with you is the amount of token launches that we've seen. I've recently seen a post by Cointelegraph saying that Bybit has become the world's second largest crypto exchange, while the leading exchange Binance has lost some market share due to previous regulatory issues. And I think that Bybit managed to like double the market share over the last year. And obviously they've been attracting loads and loads of the TGEs. I feel like everything that we are talking about, whether it's a gaming launch, whether it's whether it's the DOP, that open data protocol that seems to kind of end up to be a similarly negative story, like and we'll probably cover on the news tomorrow, I would assume. All of those projects at the end of the day land on Bybit, and DOP especially, it actually forces you to trade it on Bybit. I don't think that in the beginning you can even trade it on Uniswap or another DEX. They force you to go on Bybit for the trading side of things. So I do think that the reason why Bybit is winning as an exchange right now, is gaining market share, is because they attracted so many of those TGEs. And in that point, I think if you look within the Web3, within the crypto bubble, I think attention has never been so divided as at this point in time, with meme coins, with the token launches, with gaming, with people betting on alts, with people exploring L2s, with others trying to maximize their return by focusing on opportunities around restaking or L2s and mostly sticking to ETH. I would say this is true inside our bubble that's become harder than ever, like to rally the whole community around like one single topic. But I would say outside because of the ETFs, it's easier than ever to actually get crypto exposure.
Yes, that's very well expressed. Yeah, I think that's a recurring thing that I'm going to keep coming back to think about, because it's not obvious to me, at least immediately, what it means that attention is so fragmented and liquidity is so fragmented. I was just going into one of these restaking protocols and getting back my ETH because I needed that to come back in order to do something else. And it's like the ETH is just getting sent out into so many different directions, and it's quite a huge task to even keep on top of all of those directions they're going in. And definitely from a personal perspective, you can feel that there's so many different avenues, and it becomes a whole process of trying to decide which avenues to take. But definitely feeling that more so than ever, to be honest. So yeah, we'll keep reflecting on that, because I'm sure if we're feeling it, other people will be feeling it too. So we'll keep reflecting on that as we kind of navigate it and go through it ourselves on a day-to-day basis. So that's interesting stuff. Let's get into maybe the first discussion point for today, Legendary. I know you had one to share. I think you wanted to share a piece that was written. So if you want to share that and bring it up on screen, happy for you to do that.
Absolutely. So for today's discussion, actually based on a tweet or on a post by HGE, one of the ETH whales who also has significant exposure to Friendtech, was saying Friendtech at $5 million FTV has collected 65 million fees. And this is only possible on Base. So to have that discrepancy between 65M collected in fees, but sitting at a 5 mil FTV. And Matt Vincent was reposting that and formulating his thesis, saying, if a protocol collects X, Y in fees, do they owe us anything? Consider this. How much does Apple collect yearly, and how much do they return to the customers? Zero. Why? Because people pay to use the product. Why should it be different in crypto? Many whales received massive airdrops from protocols and made profits by flipping or other activities on the platform. Anyone with insights, I might be taking a big L here, but I want to understand. Very curious, Bchek, to hear your first reactions or thoughts on that.
Okay, two thoughts. I don't know if these are the correct one. If you could leave it up, please, Legendary, so I can keep seeing it in case I forget the second thought. The first one is to do with that little side comment at the end of the first post where he said only possible on Base. And this is more an observation of what we've seen when liquidity is so fragmented across all these L2s. Even if you have the premier, this is something I noticed when we were looking at rounds for Blast protocols, for example. Protocols on Blast were raising valuations as if they were on mainnet. And one of the things I started to push back on with people was that these valuations are just too high. There's no precedent for, even if you are a premier, whatever protocol, lending protocol, DEX, gaming project on Blast right now, if you look at the data that exists, Juice came out of the gate, Juice has a humongous TVL, absolutely humongous, attracted so much capital. But in terms of price action, for whatever reason, because the market is going to be the market, it wasn't able to, or at least up to date, it wasn't able to maybe reach an FDV that people would have thought if this project was on mainnet, it would be much higher. So for whatever reason, these protocols that are operating on L2s, from what I can see, are not able to achieve the valuations that a similar protocol on mainnet might be able to achieve. So that's my point about this person saying, well, they've done 65 million in fees, hyper profitable, whatever. Therefore, you'd think that someone would value this protocol more. But when it's on an L2, I think there's a natural discount that is taking place, whether people like it or not. So that's my first point. The second point is about these. I kind of have sympathy for this argument, which is I don't know necessarily why people expect that to receive huge incentives / airdrops for using a protocol. I was actually reflecting on this earlier today. I think we're in a really challenging place where the whole system seems to be getting broken. We were kind of having this conversation yesterday. We're kind of splitting up what our normal capital is, and then what is our mercenary capital. And it feels like a lot of the capital is increasingly mercenary, kind of charging into one place for a certain period of time and then charging out. And on some level, I appreciate why the protocols need to do that, because they want that mercenary capital. Let's not make any mistake about that. They might complain about it after, but without those numbers, they don't get the valuations they want either, because they need that money to say to their investors, to say to their other people, to convince people to buy the token. So it's kind of a situation where everyone's incentives are aligned for a period of time, and then it gets broken after. But those are my two thoughts, Legendary. I don't know what you're thinking on it.
Yeah, on your first thought in terms of the discounted valuations that we see on L2s versus L1s, it kind of makes sense. It would be just weird if you see, take the example of Juice. If Juice Finance is sitting at a $8 billion FDV on an L2 where the ecosystem token is at $1.5 billion. And I know that when Juice came out, obviously there was no Blast token, not just yet, but still the expectations were that back then even higher, that it's going to land somewhere between 5 and 8 bill. So it would still be weird for Juice to be compared to an L1 protocol, to an L1 DeFi protocol, and then suddenly sit at 4 bill FTV, which depending on the estimate back then would be somewhere between 50 to 80% of the overall blockchain. I know it's an L2, but of the overall blockchain, quote unquote, that it's operating on, and that percentage wouldn't really make sense. Now I know that this is not a general rule, and we've seen exceptions to that. I think we've seen Pixels and other gaming tokens that have rallied to significant percentages of the L2 that they are being built on. But generally, I do think that, especially with like DeFi protocols or newer L2s that are only on one chain, we do see a discount compared to similar things that would happen on an L1 or a mainnet, to be more precise.
Yeah, I mean, I definitely go with that. And I think that's one of the things I was pushing back on quite aggressively before, where people were wanting to raise on L2s at the same valuation as L1s. Now, I do think that at some point in time, this stuff should probably get abstracted away, and it shouldn't necessarily matter. Like, I remember speaking to one team in particular, and I wanted to know, like, which chain are you launching on? Because they were like a multi-chain protocol, for example. So they had some activity, I think it was on Base, some on Blast, some somewhere else. And it's like, okay, that's cool. Like, I'm not opposed to that in any way. I think that's cool. You've got activity in different places. But the question is, where are you going to launch a token? And I think the response was, we haven't decided yet. It's like, well, that's actually pretty important to me at the moment, because as a person who's looking at the market, it just feels like at the moment that, I don't know, even if you're on Base, for example, that feels like you can get a higher valuation than on Blast. That's like based on some of the numbers that the protocols on Base are able to get to, and even how some of the meme coins on Base have been able to get to, versus Blast and versus some other L2s. Like, I think that's something worth taking into account as well.
Yeah, no, absolutely agree with that. And to cover the second point and the question that Matt Vincent has been raising, do protocols owe us anything? I think one of the points that I would like to add to the argument that you've been making is just the regulatory aspect. We've obviously seen the story with Uniswap trying to turn on the fee switch, and this is not as easy as some people think it is or wished it be. And I would in principle say that many DeFi protocols would like to have a fee switch turned on, not out of generosity, but if Uniswap were to do it and would have the regulatory green light to do it, obviously that would create a market pressure for others to follow along. And then that creates a narrative where you can be like, oh, actually our token is giving back to the community. We are like paying kind of dividends back. But per se, I don't think that a protocol owes you anything. They don't owe you to share the fees with you. I think in a world where regulatory it would work and Uniswap could turn on the fee switch, then as like a potential token buyer / investor, you'd basically know if you can expect fees from that protocol or not. Similarly to when you buy stocks, you just know if a stock is issuing dividends or not. But we are
Exactly.
not at that
Exactly.
point yet.
Exactly. That's basically the point I was going to make as well. Like, there are certain stocks that issue dividends, and there are some stocks which don't issue dividends, and you just know what you're buying in advance. And maybe there's a little bit of a little bit of confusion as things stand, because some people are buying things with the hope of someone issuing a dividend equivalent, and that doesn't exist at the moment. Whereas it would be better if people just knew this is going to issue a dividend or it is not. So I think that possibility will get switched on at some point in time, and then, to be honest, I think some of these tokens can potentially do better than they are at the moment. But having that clarity, I think, would be helpful. Look, that's an interesting conversation. We're obviously talking a lot about tokens and how they come to market, and the selling pressure, the buying pressure, and what they're meant to be used for, and all these things. So we'll keep reflecting on things like that as we go through. Maybe it's time to get to the first headline, though, Legendary. We've obviously got crypto liquidations hitting 200 million. Really red across the board. Solana's pump.fund surpassing ETH revenue with almost $2 billion daily revenue. And finally, the Well token disappointment. Maybe just a quick point on crypto in general, because we kind of touched on it yesterday. We also kind of suggested that, look, liquidations happen. We don't know where price is going to go. It's kind of boring to just keep saying, well, the price is up today, the price is down today. But just so people know what exactly did happen, you've got an article there. Do you want to just explain the facts of it, and maybe some of the factors behind it?
Yeah, absolutely. They went for a way more aggressive title. Our show is Crypto Correction Continues. They talk about the Bitcoin bloodshed. Anyhow, in the past 24
We've
hours,
definitely had blood sometimes as well.
of course, yeah. The Decrypt article is saying in the past 24 hours, more than 74K traders were liquidated to the tune of 208 million, according to CoinGlass data. Majority of those, 184 million, were investors holding long positions that had bets on prices going up. Largest liquidations affected ETH investors at 55.5 mil. The reasons that this article finds for the correction, for the bloodshed, however you want to call it, is ongoing issues surrounding US monetary policy, geopolitical tensions, the upcoming US presidential election in November. And as a result of that, Bitcoin has dumped. Its 59K figure obviously is not accurate anymore. We are at 57 point something K. But this is basically the amount of liquidations that we've seen over the last 24 hours. And this is some of the reasons that Decrypt has identified. Again, I also think that the lack of clarity around the Mt. Gox situation, I don't think that it's that unclear. But I think that if you're a new entrant to the market, it's quite hard to process what has happened. What is it? Like almost a decade ago, and to see all of those numbers and to understand who will be able to claim what and sell what and dump onto the market. And also as a result of that, some people who have been into this market for a bit longer, we've seen some whale movements on the Bitcoin side of things, who understand very well what has been going on, that basically have sold some of their BTC positions and also kind of contributed to the prices to go down. Someone put it very nicely, like the positive outlook. I can't remember whose post it was. Someone said that smart money just wants to buy cheaper Bitcoin. So we are going lower until smart money has found the entry point.
Yeah, maybe that's the case. One thing I saw, and maybe Funky might know the answer to this. I see you've got your hand raised, Funky. We'll come to you in a second, but maybe you can help with this. I saw there's obviously this idea. Okay, we've got the Mt. Gox sell pressure. We've also got countries selling at the moment. So apparently Germany has sent like all of this confiscated Bitcoin to the exchange again, and they're getting ready to sell. But someone asked this question, and I don't know what the answer is because I wasn't around in crypto at this time. But they asked the question of since when have countries pivoted from selling crypto just like to the market, just on an exchange, just selling it direct, versus running auctions? Apparently that was the way things used to be done before. And I guess you get a scenario where, look, that auction's done off chain. You can just kind of do that OTC, and then you don't have this whole entertainment center around different countries sending it to the exchange. Everyone on Twitter goes crazy about it. maybe you've got an answer to that, Legendary, but let's go to Funky first. Your hand is raised. Do you have an answer to that, Funky? What is your contribution going to be?
Yeah, it was just about the Germany thing. I actually read it in the Kingdom this morning that I think around 3 hours ago, they sent it to 3 different exchanges, 1,300 BTC totaling $75 million. And so that's probably explaining some of the price action. To your point, I think that, and again, this is purely speculative what I'm about to say. Obviously, the markets have matured considerably since then. I think back in the day when they were offloading these large tranches to private investors, whether they had some confiscated Bitcoin, it was probably to not move the markets. And then also because it was such an asset that wasn't readily available. Now we have all these big sexes that have tons of Bitcoin, tons of liquidity. It's probably pretty easy to offload. I wouldn't be surprised if some of the institutions step in to sort of mop up some of this because it's cheap to them. When we're talking about BlackRock or Fidelity or any of these others. So I just, as someone who's third cycle, this is just a blip. To the point that you guys are making, just log off and go away for the summer. Like it's just going to be ranging for a while. I don't think this is anything to worry about.
Yeah, look, I think that's fair. That's definitely a fair take. Maybe you're right. Maybe it's just easier to sell it to the market now and be done with it. I still think this an auction style thing would be easier, but I guess everyone can decide themselves. Legendary, any reflections from you on that before we move on? Oh, your audio has gone for me.
I think it's not only to do with the increase in liquidity. That's certainly like massive factor. But I also think that governments now are more educated about cryptocurrencies, and they probably have realized, okay, there's enough liquidity on different centralized exchanges, and they can just sell at whatever pace they want to sell. And probably when they did go through auctions, they would partner up with the company who did the auctions. And I would be highly surprised if this did not happen on a very expensive government contract. And that company, whoever did those auctions, ended up banking a shit ton of money, taking a very nice commission of that. And, as slow as governments are, they are moving as well. They are learning as well. And they probably just realized, oh, okay, all we need is an institutional account with, in the case of Germany, Bitstamp, Coinbase, and Kraken, and we can send it there and just dump ourselves.
Yeah, I bet there was a very nice contract in place to be the people to facilitate the government sale of assets. As soon as you said that, I was like, yeah, that's probably what happened. Why have that middle person, I guess, if you can just do it yourself? Interesting stuff. Right, let's get into, I think that's enough on price action. Our kind of position on price action is, yes, we'll try to tell you about it. We'll inform you on some of the reasons why whatever is happening. But 9 times out of 10, the market just goes up and it goes down, right? So let's move on to something a bit more material. Legendary, which headline are we going to get to next? Maybe we should get to the pump.fun stuff.
Yeah, let's do it. Do you want to set it up, or do you want me to set it up?
I'll just give the few bits of information that I have, and then if you've got something to add, we can add that in. So obviously pump.fun is the meme coin generator on Solana, which has seen its usage go absolutely crazy. It's also seen its revenue go crazy as it surpassed ETH daily revenue a couple of days ago when it did almost $2 million of daily revenue. A couple of interesting bits of information, according to DeFi Llama, Solana meme coin, on July the 1st, they set a new record, surpassing Ethereum's fee revenue at 1.91 million, making it the highest earning protocol and application in the statistics. And in addition, just for a bit more context, I thought this was interesting just as a broader point about the fee revenue across different blockchains, because I feel like everyone's so zoomed in the weeds here that no one actually knows how much each chain is making. So this is from Wu Blockchain. According to Look on Chain, Ethereum ranked first with 2.7 billion in fee income in the past year. Bitcoin ranked second with 1.3 billion. The Tron network ranked third with 459 million. And then Solana came in at 240 million. BSC at 170 million, Avalanche at 68, ZK Sync at 60, and then a couple of others after. So I just put that there for a little bit of context, because I bet, despite us being in this space every day, I bet that people would have thought Solana was number 3, right? Because we talk about the big 3 majors and we talk about them in that way, but the fee revenue doesn't necessarily align with that. So I thought that would be interesting to bring up.
Yeah, very much agree with you on that. And I think that, at least for me, maybe for someone like Brad, those things are more transparent. But when I tried, for example, to read into Blast and understand how their fees work and what the thing is with rebasing fees, are they charging a rebasing fee? Aren't they charging one? How does it exactly work if there is one? They also have, I love that little side note, they also have an AI bot to answer questions on that. And I asked about the rebasing fees, and the AI bot was like, while there's no while the FAQ is explaining the rebasing process and there's no explicit mention of a rebasing fee, that does not mean that Blast is not charging a rebasing fee. And if you want additional clarity on that, you should reach out to the team. So I kind of like that even their own internal chatbot had no idea about that. So very much agree with you that I don't think that there's a lot of top of mind transparency on what protocol or what blockchain is making how much in fees and how that plays out on like a global leaderboard. So quite helpful of you to mention that. But with all of that said, I think it speaks to like the importance of the current meme coin cycle.
Yeah.
When we see that pump.fun is surpassing basically ETH even if it's just a 24-hour perspective that we're looking at in fees.
I'm going to go further and say, I think this is like a self-observation, and it means that maybe we need to allocate our time and attention in slightly different directions. I would argue that if there's a particular protocol on Solana that is doing those kind of numbers, every single person in this audience, including the people on the stage, including ourselves, should be way more allocated to that. The reason why, and I'm going to think about how I frame this, there's, for some reason, and I admit to this feeling as well, there's like there's a holier perspective that people think that meme coins, there's something dirty about them, there's something like a bit shady about them, and other people might do meme coins, but other people are holier than those people. And I just don't think that same perspective existed for when we were all trading NFTs really, really aggressively, even though the net effect of it all is basically the same. Like, you put your money in something, you go to sleep, you wake up the next day, and there's 100 listings, like you're all trying to sell at the same time, and sometimes you get completely rugged and sometimes you don't, and there's kind of different things going on. But my reflection is, maybe this is a reflection of where we are, not only in our personal portfolios, but in where we are in just, the type of stuff that we're trying to build, is that we're not necessarily, whilst we're in the trenches doing all kinds of like being on-chain participants and securing airdrops and choosing to go about our on-chain business in that way, it does feel like there's this other place where if you're purely more speculative, that's where the liquidity is. So when we're speaking about the liquidity being fragmented, yes, on the one hand it is, but at the same time, that seems to be the place that you should really be in the trenches if you want to maximize your risk and maximize potential gains. What do you think about that statement, Legendary?
Yeah, I mean, I agree with it. And again, that all goes back to the conversation that we had so often on the space, is like, where are you on your journey with your portfolio? Obviously, if you have a smaller portfolio, you want to take more risks and play catch up to get to the levels that some people of the old guard, or I don't know, hit a 7 or hit an 8-figure portfolio, and you are playing around with a couple $1,000s, then I don't know, just passively staking your ETH and waiting, you won't make it to a couple million in a lifetime. You need to take additional risks to at least get to, a 6-figure valuation, and then maybe manage that transition. That's something that Brad has been speaking about on the spaces yesterday. Manage the transition in your risk exposure once you've grown your capital from a smaller base to something more significant, and then actually try to shift from those very, very short-term games to something more mid to long-term oriented. Like, this is the challenging part of that. But I do agree that definitely, if you want to maximize risk and want to maximize potential gains, this is something to, spend a lot of time on. I think perception still might be a bit skewed, because I feel like with meme coins, A, there's an unprecedented amount of LARPs who are claiming to make profits that they've made. And B, even people who made profits often don't share the 50 like rugs that they invested in.
Yeah.
And someone has shared an excellent post yesterday on how those alpha groups are working that you see on Telegram. Or I called those 5 100Xs in my alpha group join now, by basically saying you start with a Telegram group, you invite a couple people in, you get some of the chart screeners connected to your Telegram chat, you post charts in there, some of the people in your group also post token tickers in there, and eventually, if there's like 20-30 people posting shit in there, someone will hit the 100x. Then you take that 100x, never give credit to the person who found it, post it on your X account, do that 4 or 5 times until you have your 400 or 500x's, and then you open a paid group and you rinse and repeat. And this is something that we are seeing over and over and over. And I've been seeing it more and more in my own timeline, where people, I don't want to call out anyone by name, but people having their 100x call groups, alpha groups on Telegram. And I feel like this adds a bit of fuel to the fire and skews the perception of like how easy it is to have success with meme coins. I do think, and I do know of quite a few people who are making a killing, spending 12 to 14 hours a day on pump.fun and just literally printing money. But again, as you said, it's the highest risk class that you can play, or the highest risk game that you can play right now in crypto. And I feel that we often kind of neglect there's also a lot of people losing a ton of money trading meme coins.
I've got one like final reflection on this. I think those are all great points. I've got one final reflection on this. It was kind of inspired by the Moon Overlord's tweets, kind of linking this stuff to sports betting. And I think I think one of the things that's happening in the States, and this is, look, I appreciate gambling is a part of, I think actually the majority of life in part is a gamble. Like there's actually loads of aspects of gambling to all the things we do. And I think the concept of gambling gets demonized because people are just thinking about it in terms of, I don't know, going to play roulette or something. So I think there's gambling in all parts of life, so it shouldn't be demonized in its entirety. But at the same time, there is definitely something going on in the States. I watch a lot of American sport, and there's something going on where I think they've opened the floodgates basically to allow gambling. I think for a long period of time it wasn't allowed, or it wasn't allowed to be integrated into the content, whereas now it's starting to kind of permeate and get in far more. And personally, as a sports enjoyer, and I know people can go both ways on this. Some people can really enjoy sport and really enjoy the gambling with it. For me, I'm like just interested in the sport. And the gambling part of my brain is more like, look, I want to go risk on in crypto and I want to do that kind of stuff. And then when it comes to the sport, leave me alone with the data, leave me alone with the players, leave me alone with the win or loss thing. Like victory is enough for me. Like people trying to be victorious is perfectly fine. But I actually don't want that stuff. But it feels like, and this is an observation, that sports gambling stuff is being shoved down people's throats in the States based on what I've seen. And actually, maybe even across the board. That happens in the UK all the time as well. Every other ad when you're on the Sky Sports channel is like a gambling one, trying to get you to gamble on the game that you're watching. And I think there's something bigger going on there where these rules are just getting loosened a little bit. And so people are falling into that kind of speculative behavior. And as I said, that speculative behavior can manifest in various ways, and to some extent the whole of life is a gamble. But I just feel like it's getting encouraged even more. And maybe shout out to John on Twitter, John from Play Ember said Gareth Southgate is gambling with the England team at the Euros, not enjoying it. Exactly, that's exactly what I mean. There's a lot of gambling going on in general. Any final reflection there, Legendary, before we move on?
Yeah, very much agree with that. Like crypto's always been very, very attractive for gambling, and meme coins kind of reduce that to the purest form. You don't have an adjacent sport event, nothing else. You just have the purest gamble in itself. Will this coin go up or down? Don't need to bet on anything else. So it's a more minimalistic version of gambling. Just also wanted to shout out just Stefano from the YouTube comments saying that His Excellency Justin Sun has just posted 10 minutes ago that he is willing to negotiate with the German government to purchase all BTC off market in order to minimize the impact on the market. Someone in the comments is asking, does this guy have 2.3 bill? And I think we've seen Justin Sun doing quite some legendary moves. I remember when USDC was depegging, that he has contributed to USDC restoring its peg pretty quickly by, I think it was 1 bill that he infused in a very smooth way, similar with EtherFi, where he came on board of the restaking platform just 2 days before the airdrop, and I basically ended up being the highest airdrop receiver because he just parked a couple $100 million in there, and basically by that forced the team to change the tokenomics that he had to vest parts of his airdrops because it was just way too significant. So let's see how this Justin Sun situation will play out. He definitely has the financial power to maybe not buy all the 2.3 bill, but buy a significant amount of that BTC outstanding.
That's funny. We give thanks to His Excellency for his support for the cryptocurrency industry. Final thought, Funky, your hand was raised. Maybe you wanted to come in with a point about the American point about the kind of sports betting angle, and then we want to hit the Web3 roundup and just hit the final headline quickly.
I'll just tell you this, it is insane. It is hard for me to properly articulate what this sports betting culture has become in America, especially because of the ease of access with apps. So you have like FanDuel, DraftKings, like once fantasy football really started taking off, but then like the last 2 or 3 years or so, MGM, everybody has them. Everybody has a way to cross state lines. Here in Florida, we have Hard Rock Bet because they have the Seminole, they own all the Hard Rock casinos. And so they got it muscled through the legislature where now you can just basically have this app, and the minutia, the things that you can bet on are just nuts. Like that, oh, so-and-so will open with a 20-yard pass and result in a first, like it is so granular, the things that you can bet on. It is gambling on steroids. I'm like you guys, I'm not a gambler. Like I'm a Green Bay Packers fan. I put $100 on when they were going in the playoffs because it was like, it would have been $7,500 if they won the Super Bowl. So occasionally I do a little bit of betting, but not very much. But the things that you can bet on are nuts. And they are openly advertising it on TV all the time. You see very famous movie actors, Jamie Foxx doing MGM ads and stuff like that. It is, as you can imagine, like everything else we do in America on another level.
Yeah, you do like to take things and definitely take it to the next level. But look, I'm kind of conscious that we're in a gambling space. I'm not overly critical of another gambling industry because we're all speculators in this space. So I don't want it to come across like that. I guess the main point is,
yeah, touche.
I kind of just like sport. I kind of just like sport the way it was. So that was my maybe main reflection, but appreciate your take as well and some extra information there, Funky. What we need to do, we're running out of time, so let's just hit you with the Web3 roundup to get you up to speed with everything else that's happened in space. In case you might have missed it from the last 24 hours, some interesting other things. Maybe we'll have a final reflection on the Well token from Legendary, who I think was kind of close to it. So from the Web3 roundup, number one, Forbes published an article considering the US moving first to hold BTC as a strategic reserve asset. That is interesting. That's not guaranteed either. It's just a kind of article considering that. Next, banks to publish crypto asset exposure from 2026, global regulators say. That came from a Reuters news source. That's pretty interesting if they have to disclose those holdings. Next, Blast dumps another 10% as Pac-Man attempts to address misunderstandings about governance. Could definitely dive into some of his thoughts. We don't have time for today there, but I thought some of it was quite conflicting. Finally, Entangle memecoin Borpa dumps 95% after it decides to cut ties with its company. Not entirely sure what was going on there. Seems like a bit of carnage. Bitcoin scaling protocol QED raises $6 million seed round at a 9-figure valuation. Mantra will tokenize $500 million of real estate assets for a UAE builder. That's pretty interesting stuff. And then finally, Hivemind Capital, we spoke about them yesterday as well. They announced another acquisition of Rafiq Anadol pieces, this time 35 wins of Yawanawa pieces. I think yesterday they announced they'd bought 12 Synthetic Dreams pieces. So I always like to keep an eye out on the art market as well, because there are clearly certain people with deep pockets accumulating certain pieces. So good to keep on top of that. Legendary, that's the Web3 roundup. We've basically run out of time for today's show. But do you want to give a quick a hit of what happened with the Well token, and then we can close out.
Yeah, absolutely. I mean, we touched on some of it yesterday. A key takeaway is a token was supposed to launch on Bybit with the claims for farmers, with the claims for NFT holders and participants in the public sale to be available half an hour before the token launch. That got postponed to 15 minutes before the token launch. Then communications went radio silent. Token launched on Bybit. Nobody could claim their token. Still, someone was dumping the token. Apparently, 6 million have been dumped. Comms opened up only 2 hours later, and then the claim was working for NFT holders, public sale participants. Team said that there was a quote-unquote last-minute loophole that they needed to fix. Grail has made quite a good post about that and asking the question, if it was not the community or investors who do claim, then we have a real mystery in our hands, because then who was relentlessly selling millions of tokens? Question mark ghosts. Zach XPT also got into the situation. Kungs is saying that it wasn't basically them dumping the token, and also the prices don't add up. The screenshot can't be true, because at the price displayed in the screenshot, it would imply that the Well token has a higher FTV than the entire crypto market cap. Other people have refuted that claim and say, no, the screenshot has to be true. So it's obviously still a back and forth on what has been going on with that. And it seems to extend a bit and draw bigger circles. I see now some people attacking Memeland, because obviously Kungs and Ray have history and they work together, but Kungs was listed as an advisor to Memeland. And then that somehow got questioned as well. Why is he an advisor there? So yeah, a lot of people have lost a ton of money and obviously are very rightly so emotional about what has happened. But I still think that Memeland doesn't have to do anything with that. Very, very sorry for everyone who lost money in this. Obviously have been disappointed by that myself. I bought in early enough in the Cubs ecosystem that basically I did not lose money on that, but still have expected a different outcome. I'm curious to see if Zach XPT will come up with a more conclusive investigation on who it ultimately was who dumped those tokens.
Yeah, interesting stuff. I do think that, as you say, maybe some investigation is still required here, a few conflicting ideas, so we can't report anything definitively. But when it comes to the kind of public outcry and outrage, I did notice that there were people who wanted to start to blame Ray, as you said, from Memeland. It was like, well, he should come out, like he's associated with scammers. Like, look, guys, again, if we don't need another reminder, this is a personal responsibility for your own investment decisions, personal responsibility for the buttons that you press. I participated in the public sale for a small degree, and it's gone. I don't even know if I'm going to go to press the claim button, because it seems like it's a complete mess. So that can happen sometimes. This is the space we operate in, and taking personal responsibility for that is obviously the best way to be able to manage everything that goes on in the space, because the more you point fingers at other people, the less you're able to cope with stuff in the future. That's how I've seen things play out. But look, we're already out of time. That was our show for today. Hope you found it interesting as always. Thank you to my legendary co-host Legendary for joining, and our top contributors Funky and Tiro for being up on stage with us. Shout out to all the YouTube commenters who seem deeply concerned with nothing that we're talking about on the show, but whatever is happening in the Euros today. Some people think Germany are going to be winning. Some people think England are going to win. Shout out to those people going crazy. We appreciate you. Have a great day. We'll be back again tomorrow, 7 a.m. Eastern Time, 12 p.m. BST for the final show of the week. Have a good one. Take care. Bye-bye.
Really been going back to back to back to back to back to back to back. Like the neighborhood warriors.